Okay, welcome back. So 160 points. We're at I think at the day's high, pushing higher. 18,326 is where the index made a high. We're at 18,323. So yes, absolutely no let up in terms of what we have been seeing for most of the day, except that dip that we saw at about 1:30 or so. Now, this is a CNBC-TV18 exclusive that we're getting to you. It's a story we've been tracking for a while, which is basically the shortage of coal and consequent effect on power supply in some states. Coal India is now taking action, more action. It's asked its subsidiaries to refrain from conducting sale of coal via the e-auction route for non-power companies for a fortnight or so. This is not permanent. This only applies to coal for non-power sector, but that is what is happening right now. Anshu picked up the details. She's joining us with that. Anshu.
That's right. Even as the situation for coal is improving for the power sector, it's the non-power sector which is feeling the pinch of it. That is aluminium, steel, cement, chemical, and other sectors which rely on coal for generating power for their usage. Now, on the reports of Coal India suspending supply of coal linkage to these sectors, that is non-power sector, as well as refraining, has asked Coal India has asked subsidiaries to refrain from any auction to the non-power side. Now, we learn from sources in the government that for a fortnight or so, there will be curtailment of coal supplies for the non-power sector, but it is on the pretext of giving priority to the power sector. But thereafter, the government expects it to come back to normalcy. Now, it has also reiterated the fact that in the first half of this financial year, record supplies of coal has been made to the non-power sector as recent as 2 weeks back, and it continues to see that production will be increased and will be supplied at a higher level to the non-power sector. So we'll have to wait and watch out for that as improvement is seen in the power sector. Now we'll have to see how soon normalcy returns for the non-power sector. Back to you.
Well, that explains why. In an otherwise roaring market, Coal India is down closer on 3.5% after sources indicate to Anshu that the company has been directed to refrain from e-auction of coal for the non-power companies. Now, why is this negative? Because e-auction contributes nearly around 16% of volumes in FY21. And in terms of e-auction realizations, well, they were at a 14% premium in comparison to FSA realizations. Now, rough estimates suggest that though it contributes only around 20% of the sales volume, but would contribute nearly around 40% of the EBITDA, at least 40%. It's a rough number depending on the pricing of e-auction. In August 2021, e-auction volumes were at its highest we've seen in the past 6 months, and its premiums were at the highest levels we have seen all the way since March 2020. Now, the Coal India management, they joined us here on CNBC-TV18 in September 2021, and they indicated that e-auction prices are up between around 40 to around 50%. That's the premium in comparison to FSA prices. And they were optimistic that they could go ahead and push through an FSA price hike as well. In a seasonally weak month, that is September 2021, the volumes, yes, they came down to around 4.2 million tons odd, but the premiums, they surged up by a whopping 150%. Analyst feedback suggests that if e-auction sales are not resumed, it reduces the profitability and the possibility of higher earnings upgrades. And that was the risk on the upside if e-auction premiums continue to surge. So that explains why e-auction sales volumes are rather important for Coal India. Deven, I wanted your take on the stock. It's down close to around 3%. Out of nowhere, it had that one-way run from around 130 all the way to around 200. The best is behind them, or do you believe valuations and dividend yield and they try to diversify their business, will it help them?
Nigel, I think you explained, most of the part on the fundamental side. And I think even though they always have been supplying 80% to the power and 20% to the non-generation power generating companies, I think the larger part of the profitability probably comes from the e-auction in this time. And I think having told no to them, probably it puts temporary brake on that particular aspect. However, I think the bigger question is, and that is important, that many of the world ESG funds would never look at this particular segment for investment. So today, with the market euphoria continuing, definitely I think you are likely to see, I think people investing into this stock, trading into this stock. But I think some of the large size funds which would otherwise I think start investing, I think they would never come into it. And that's one of the reasons for which I think up till now the stock has been languishing, the price has been languishing. I don't see too much of a change in that particular approach because most of the global funds are mandated to look at the ESG component when they make investment. So could be, I think, one of the reasons for which I think stock rally is not, I think, very clear to me. Maybe I think today the boom is on because of, I think, higher prices. One can continue to hold on, but otherwise, I think not too much clear about how to trade the position in this kind of companies.
Okay, Deven, we'll let you go on that note. Thanks a lot for joining us. Have a
Thank
good
you.
weekend and festive season. And of course, at the extended one, happy Dussehra to you. But let's welcome our Alpha Manager for the day, Tridip Bhattacharya, Co-Chief Investment Officer, Equities at Edelweiss Mutual Fund is joining us. Tridip, hi, good afternoon. Thanks a lot for joining us. So how are you deploying all the money that you're getting? Putting more and more in names like IRCTC, momentum investing, or value investing? What's the call now?
If there is a term, before I get to the answer, first of all, wish everyone a very happy festive season and Dussehra greetings in advance. But just to respond to your question, if there is something called earnings upgrades investing in advance, that's what we follow. To answer you, more practically, I think after a good while, we've seen actually earnings pick up in the country. After 4 or 5 years of earnings being null or flattish, or we start with a high number and then we end up being a lower number. So from an earnings standpoint, I'm reasonably positive for the next couple of years. And hence I said that wherever possible, we can anticipate the earnings upgrade to come through with the next 1 or 2 years. That's what we are putting our money to work in.
Sudeep, hi. Good afternoon. Prashant here. Should we expect great numbers from banks which are set to start to report earnings? I mean, HDFC Bank will report on Saturday. Others will follow. And how will that, I mean, if the numbers are good, do you expect, because it's widely considered as the one sector which is still available at reasonable valuations, and it's a large sector. I guess in most in institutional portfolios, it still would be 20 to 30% of the weight. Do you think this will start to do well?
I think, let me answer your question from the second half fiscal year 22 perspective. I strongly believe that we still have more earnings upgrade to come through in the second half of fiscal 22. Whether that is in the form of consumer discretionary demand ahead of festival season, or over the next couple of quarters, credit demand eventually picking up. I think coming to your question, within the financial services sector, the corporates have seen meaningful deleveraging over the last couple of years. The banks have gone through the NPAs, provided for it, and credit growth has been tepid. I believe over the next couple of years, there's a good chance that we will see a strong economic cycle to come through, as I highlighted earlier. And hence, in that context, credit growth to pick up. Whether that happens this quarter or next quarter is the moment of conjunction. But I do think that as credit growth picks up, overall corporate-facing banks and also along with the retail-facing banks would actually start to see a little more sunshine in their sector than what they've been used to over the last 2 or 3 quarters. So yes, I think the banking sector would actually do well if you take slightly longer-term view over the next couple of quarters. This quarter, depending on which company comes first, we have to kind of look at.
All right, Tridip, so that's about the banking names. But, the sector of the week really has been the auto space because of its electrifying move, so to call it. I'm looking at your portfolio. It appears that you're more or less more bullish on the CV cycle. Could you tell us, from the auto basket itself, your pecking order?
Sure. So again, I would start with the economic cycle that I talked about, that I expect economic cycle to be buoyant over the next couple of years. And as a play on that, obviously, CVs is one of the important characteristics or important elements which does well or as part of economic linked sectors. And hence, on the back of that, we expect CV cycle to be reasonably buoyant for over the next year or so. And hence, we have been positive on auto sector selectively from that standpoint as well. Of course, EV is a new phenomenon for Indian auto sector. Not new in the sense it's kind of coming to the markets of late. But I think fundamentally speaking, after having chip shortages for a good while, which are supply shortages rather than any long-term concern, I would say that at some point over the next 3-6 months, those concerns will get addressed. CV cycle as the economic picks up would start to exploit. So I think after a good bit of lull that we've seen in the auto sector, they might actually kind of, and also for some of the companies, particularly the model cycle might actually kick in as well, which so far they haven't had the benefit of. So all of these three put together makes us feel a little more bullish on the auto sector than what we have been over the last couple of years or so.
Okay, by the way, the 3 p.m. move has kicked off a little bit. The market's once again at the high point of the day, and really keep an eye on Axis Bank. That's the one stock which is moving. HDFC and HDFC Bank also moving higher. So the Bank Nifty has moved to high point of the day now. 39,317 is what you have on the Bank Nifty. So that's the space, doing quite well. Tridip, in your portfolios, you have a lot of these PLI plays. Dixon is there, there's Amber, but these are now becoming large plays. Do you find valuations prohibitive now, or do you think this is still a concept story and perhaps even compounding story from here on as well?
So just to put the context behind these two names, in my opinion, the supply side reforms, along with the growth schemes that the government has come up with, has the potential to add 1 to 2% of additional growth, so on a structural basis to the Indian economy. This is something that we haven't seen in a good while. And hence, as a play on the PLI schemes, we have been playing, not just recently, but quite a while, stocks like Dixon and Amber, and they've done quite well for us. And at times we have taken some profits, but we have let the stock run its course. I think these are multi-year growth schemes that will kind of benefit the companies in various different sectors, and these two are as a corresponding play of the same. Without getting too much into stock specifics, I would say that PLI, along with other growth schemes, which is government taking the pain away from the private sector, are two things which you would be, along with divestment, would be the three things that we would be positive on from a government side or in the form of the government initiatives that we have seen in the recent past. So yes, we are bullish on that particular segment of the economy, which benefits from these schemes as well.
Tridip, we were talking with someone earlier who was very bullish on real estate, who also said that ancillary sectors like building materials, paints, for example, even housing finance, and a bunch of other areas will do well. I mean, of course, if the core sector does well. Do you own anything there in that entire spectrum?
I would actually want to say that, again, relating back to my earlier statement, that I would expect the economic cycle to be strong, something that we haven't seen in the last 3-4 years. Last 3-4 years, we've seen reforms. Now we'll see growth, hopefully, and that brings earnings upgrade. And in that context, sometimes rather than the direct plays, which could be asset intensive or capital intensive, or the return ratios could be lower, given that we are bottom-up investors, sometimes better returns could be made who kind of supply nuts and bolts to these sectors. For instance, when you talk about real estate demand, you may play a real estate developer, but there are many other companies which are in capital goods sectors or others which are a play on the same. So without getting into, again, company specifics, there are various ways to play this scheme, which is the economic cycle. And to a certain extent, the allied sectors are one good way of going about it. And we have quite a few such names in our portfolio that they've done well, and we expect more from the next couple of quarters.
Well, I get that point. I'm looking at a couple of cement names. You got, the large L&T as well in there in your portfolio, though you're not naming any of them. We'll just get a brief portfolio. Your portfolio should come up on the screen. Well, final question, Tridip. You have clearly played this IT bull run. You have got the large cap names in there, the mid cap names in there. Is it running ahead of itself now? Some of these valuations, the large cap at 32, 33 times odd, the mid cap, some of them at 40 to 50 times. It's running ahead of itself. You think so, or better times ahead?
I would place a framework in front of you. Short term, it could happen that, in the euphoria of the results, they could go a couple of percentage higher and that comes about. But I think the main thing to keep in mind from IT perspective is that over the next 2 to 3 years, we have seen the initial round of digital spend from corporates, i.e. the clients of Indian IT services companies happen. The second wave, which is in the form of cloud migration, is in the process of happening. And the third would be the mature stage when we see massive offshoring. So over the next 2 to 3 years, there are multiple trends that will positively impact the IT services companies. So short-term up and down could happen, but I would be structurally positive on the sector from a 1 to 3 year perspective. Within that, obviously, of late, some private equity-owned mid-cap names have actually really caught the fancy and have done well as companies overall. And we own and have played some of them quite nicely. I think that's been a good change for investors as compared to a decade earlier, where it was only about the large cap. So today it's a hot bet for stock picking. We are positive on that, and we look at individual picks on an individual basis to play this team.
Okay, all right, Trudip, thanks so much for stopping by. Wishing you a good weekend ahead and festive, blessings on you, your family, as well as everyone at work. Well, on that note, though, Avenue Supermarts, well, that one's going to be reporting its Q2 numbers on Saturday. We'll get the key expectations on the other side of the short break. And as always, we'll tell you what's going on in dealing rooms in our special segment, D-Street Chatter. We'll also get you a couple of technical calls, what to buy and sell for a reverse trade in the coming week. Stay with us.